welcome to this week's edition of the Grain Gauntlet. Got Hedge Plus owner Patrick Hayes here, ready to tackle 5 questions from clients and prospects. Are you ready to go, Patrick?
I hope so.
All right, sounds good. All right, first question says, what do you think the crop is going to look like in a few weeks?
I think we're going to have good to excellent rating mid-June, early to mid-June, maybe at record levels. We had a lot of rain throughout the Midwest, and we're supposed to get some more in the next week or so. That pattern seems to be pretty friendly for moisture. The temperature is going to heat up. It's summer. We're going to start looking outside at night and watching corn, actually grow 12 inches. You'll probably be able to hear it growing. I think the crop is going to look excellent in most places. The places that needed the rain the most got some. They'll need more and regular rains throughout the year, so there's risk there, but I think the crop is going to look outstanding.
Okay. All right, the second question says, what are the arguments to be made for bulls and bears right now?
Well, there's good, strong arguments for both sides. We have the war going on. That's definitely bullish and puts premium into prices across the board on all commodities. And I just don't see a solution, but at the same time, there probably will be. But the war is definitely bullish. The fact that world ending stocks have come down in corn 5 to 6 straight years, even with the large safrinha crop, is an amazing thing. Demand is that strong and that great. So demand is fantastic here in the U.S. and in worldwide. We seem to have an appetite for more and more corn and soybeans right now, and that is bullish as heck. On the bear side, of course, is what always trumps everything else, which is weather in the summer, especially when you got the largest crop by far in the world in corn growing here in the U.S. and having good weather. So bears can point to the weather and probably a yield that will, in June's supply and demand report, exceed the 163 and 183, and maybe in time exceed the 186.5 we had last year. Even with good demand, it's going to be hard to overcome a yield of 187 or better, and that's possible with early planting that the bears are pointing to. That usually leads to big crop. And in fact, we're going to El Nino year, which usually produces a strong jet stream, and that means we don't get stuck with high pressure sitting over any one area for too long. So the parameters for a good crop are there. The war is still going on. There's still risk, and we're still, even with big crops, losing world ending stocks. So it's a good argument for both the bull and the bear to make. And who's going to win right now? It's really, I think, news-centric. As we see more news stories, the market kind of flips. So what really is going to win right now is volatility. We're starting to see that. Much bigger price moves every day.
Okay, sounds good. This question says, is there enough strength with corn and beans to get past the $5 and $12 barriers in the near term?
No. Well, beans are above $12 right now. Well, very close to it. And corn is only 3 cents off $5. So, can it rally 4 cents? Yeah, it can. Can we go above $5 significantly or $12 significantly? I think it's going to be difficult with the weather the way it is right now to rally significantly. However, we have an explosion of expansion of the war in the Middle East, and we add more countries to it. They bomb Saudi Arabia or something, the Iranians. All of a sudden, yeah, we could be 30 cents higher in corn and 50, 70 cents higher in beans. But if things just kind of stay status quo or get better in the Straits of Hormuz, you're going to see, I think, a pretty constant move lower towards 450 in corn and maybe.
Yeah, to elaborate on both that and the previous question of arguments for bull and bears, I think the bullish argument's more long-term. One of the things we're seeing more dramatically around the world is that fertilizer cost and how that's restricting. It's restricting a lot of planting in other countries where that price shock is cutting acres, not as much here. And then short term, more of a bearish argument with the weather improving and just how much more premium can be added from this war. It's starting to seem like this war is starting to be priced in, and it's almost like what took place over a long period of time with the Russia-Ukraine war, where it took a longer period of time for the market to stop reacting to that war. Kind of starting to feel like that's what's happening with this war with Iran, that the market's just starting to accept that reality, and that we've seen the greatest price shock so far.
You're right, and the world does adjust, right? I mean, I read a report today in one of the African countries is exporting more crude. Canada is exporting more crude. U.S. is exporting more crude. Venezuela, Russia. You know, there are other countries picking up the slack. That's normal. We're seeing depreciation of demand by people cutting back because they can't afford to go play. Maybe they can't take a plane ride, right? This summer. Maybe they go somewhere for vacation closer to home. The market's going to react to the higher prices. It just is. And therefore, further reaction will be reduced as we go forward. So, yeah, but, you know, it's a crazy world right now because we could be 70 cents higher if Iran bombed the snot out of the oil facilities in Saudi Arabia. This thing would be crazy in one day. Yet, we're probably going to end up with a good crop here in the U.S. We're probably going to end up with pretty good crops around the world this year. I am, however, really bullish on 27. The longer this thing goes, the more likely costs are going to be and the harder it's going to be to grow big crops. However, flip side of that, the longer it goes, the more likely we have a world recession and a reduction in demand. So lots of variables, lots of moving parts, good argument for both. Bottom line is volatility, right? That's what we're going to see.
Yep. All right, good. This question says, so do you think China's going to end up buying what Trump's people have indicated they've committed to buy from us? Is it going to happen?
They're going to buy from us. They have to buy from us. Bottom line. You know, the U.S. and China made nicey-nicey. And it's a reason because it's beneficial for both right now. China plays the long game, and when we say long, 50, 100 years, that's their outlook. Our outlook is, we got election in November, right? But both sides need each other right now, and so they're going to play nicey-nicey. I think what the world is learning is a couple things, and if our leaders are smart, they'll realize it too. I really hope. The Russians attacked Ukraine. They made some progress, took a little bit of land, but look at the costs. We bombed the snot out of Iran. Did I say if I said Iran, I meant Ukraine. We got the United States and Israel bombing the snot out of Iran. And look what we have, a stalemate right now. Industrial countries, modern countries are so large and so hard to take over that taking over countries like we used to in the 19th century just isn't going to happen anymore, people. You better get along. You better figure ways out for peace, because you're not going to be able to march into a country and take it over. You're not going to be able to march into countries and change the country to the way you want it. It's just not going to happen. It takes too much effort. And I'm hoping that the world is seeing that. I hope China's seeing that and doesn't do the same thing and try the same thing with Taiwan. I'm hoping the U.S. realizes that with Cuba. We don't want to get... I love a peaceful takeover of Cuba. I want to go on vacation there. That'd be great. But let's figure out a way to do it without warfare, because warfare isn't working, guys. It's not working.
Right. And you and I talked about this morning with regard to people still doubting whether China's going to fulfill these commitments. One, they did fulfill last year's 12 million metric tons. That was done. And two, it's not in their interest to confirm these. They're not going to come out publicly to say, yeah, we're going to buy this. But they will, because there's an agreement. They need things from us. We need things from them. And they've already shown that they're going to follow through on these commitments. Now, as far as beyond Trump's term, that's a whole nother story. But as long as Trump's in office, and has he's shown he's going to use these tariffs. We have some leverage. It's pretty much proven by now. China is going to purchase what has been indicated, and they're not going to come out and confirm it. So stop looking for that confirmation, people. I see that all the time, almost weekly. It's just not going to come.
The market is bizarre what they look for. I mean, I don't get it, but that's me. I don't get why people are looking for sales today because we have a China deal. Look for the long term, look for what's going to happen. And the bottom line is China and U.S. need each other right now. They absolutely need each other right now.
For sure. All right, final question from a prospect says, what's the potential upside with a hedge account if we've been happy with our cash sales?
It's another tool. I mean, that's great. I know our guys are really happy with our cash sales over the years. We've done a really good job. We consistently get above the average on-farm price with our sales. We use that as a benchmark. We try to beat it every year. We do that. However, what happens if corn rallies to $6 on a hot, dry period of time? We recommend a sale to 50%, but you don't know if you're going to have a 50% crop to grow. Now, you're going to take the risk and sell 100% of your crop with our 50% recommendation. What are you going to do? You have nothing to secure that price without a hedge. If you use the hedge appropriately, don't take undue risk. It can be a tool, an asset. It's just like any other tool. Sometimes a tool will sit in your toolbox for years and not be used. If you have an account open, you can go in the toolbox. It's there. You can use it anytime you want. It's a tool. It's an advantage to you to have another way to either buy back the crop or hedge a crop when you can't do either of the other two.
All right, good. Thank you. Thank you for those answers. Thank you for the questions, everyone. That's all for this week. Remember, the easiest way to get your question answered on this weekly segment that we do is just ask your advisor. Our advisors make note of the best questions we receive each week, and we get them on this program. So that's the best way.
Have a happy Memorial Day, everyone.
Happy Memorial Day. Talk to you all next week.